but I don't know how to do all that stuff.
Charlie might be able to help you with that.
We'll make American IRA pay for it. So
Okay.
won't do it for free. Trust me. Tell them. And I might have to pay somebody to
Oh,
do some
I
sort
think
of.
we might be live. What?
Uh-oh. It says 2 participants. Oh yeah, I can't tell from here how many we're.
Mike, I can never tell. Okay, are we live? Anybody? Somebody let me know. Okay, yeah, I'm not. Yeah, it says live on Facebook, so well, if we're live on Facebook, I should be able to see it somewhere. Oh, I don't think I'm
with
on
Roger,
there.
and I can't see anybody in there but you. But I know there'll be people in there.
Okay, I see us. We are live. All right, so we got to give people some time. It's like 3 people have joined us, so we'll give them some time.
It's just now 7:00, just this second.
Okay. I'm excited. Are you? We've never done this.
No? Do I have a delay? Do I look weird?
No, you look great. You don't have a delay or anything.
Okay.
I see you're on the water.
Yeah.
Wow. Good living.
It looked like it was going to storm, but it never did. A rough life to quarantine out here.
I'm sure some people wish they had that life. Did I lose you? I can't hear you. Can you hear me? Did you press mute? Let me see. No, you're not on mute. Did you press mute on your phone? You just went out all of a sudden.
Can you hear me now?
Yes. What did you push?
Can't hear you, though, for some reason.
I can hear you, though.
I just can't hear you.
What about now?
I might have to call and do the phone thing really fast.
Okay, go ahead.
Okay, hold on 1 second.
Let me know when you can hear me. Now you're frozen. All right, Mike will be right back, y'all. Well, while we're waiting on Mike, welcome everyone. I am Chantel Owens with the Georgia Tax Lien Bootcamp. Happy to see you all. Hello, Simone. Hello, Abby, Jesslyn. Exciting.
Can you hear me?
Yes. Can you hear me?
I hear you now.
All right.
Let's switch back over to real internet and got off my hotspot. Crazy. Back in the day when that would happen, I probably would start crying. Now it happens all the time, so I don't.
Yes.
We're ready. Let me show my face. Show my face.
I'm sure the people want to see you.
There it is.
All right, Mike, welcome. I'm so happy to have you on. I'm so excited about tonight's topic. I just want to Introduce myself. I'm Chantel Owens with the Georgia Tax Lien Bootcamp, and this is my special guest, Mike Ventry with American IRA. And he has come to talk to us about all the great benefits that you can take advantage of, based on the pandemic. So I'm excited to hear about that, Mike. Welcome.
Well, thank you for having me. It's always a pleasure to see you and all your peeps for Tax Lien Nation. So I studied up on this back when it first came out, CARES Act, obviously. Well, first, a little shorter history. So there's certain ways to fund an IRA. One is obviously make a contribution. Another is transfer an IRA to an IRA. And another is to use your 401k money to fund an IRA. And the last 10 years, every time somebody comes to me with a 401k at their current job, I have to be the bearer of bad news and tell them, I'm sorry, you can't use your 401k while you're currently working. You have to quit, leave, retire, what have you. Now, on the bright side of the pandemic, the CARES Act has opened up the door for people to access those funds while they're still on the job, which is
that is so awesome.
Crazy good for a lot of people that have been waiting. And I've actually had people quit their jobs when they found out that they couldn't use their 401k money while they were still there. So this is great news for people, especially people that are affected by the virus. We'll talk a lot about what you can do and everything. The term affected by the virus will come up, and this is what affected by the virus means in the IRS's eyes. One, you, your spouse, or a dependent has tested positive by an approved CDC test for COVID-2, which is SARS, or COVID-19, which is the coronavirus. So that's an affected person by the positive test. Then there's the affected person who has lost hours on the job because their company closed down, they were laid off, they couldn't find childcare. That's actually in the CARES Act. If
that's going to qualify a lot of people right there.
And everything we're going to talk about tonight, may change in the next couple of days because the Senate just proposed the HEALS Act. HEALS, HEALS Act, which is the follow-up to the CARES Act. So it'll likely change some things, extend some deadlines. We'll talk about some deadlines that you have to worry about. But that's just now coming down the pipe. They said it'll be done shortly. So you're affected by the virus by testing positive, your spouse or a dependent, you've lost money because of your job. If you're self-employed, loss of business, closure of your business.
Oh, wow. So business people are included. Okay.
More so than others, to be honest with you. And we'll talk more about how there's more of a door open for those people too.
I don't know. I'm your voice went down just a little bit.
Can you hear me now?
Yes.
Okay. I don't want to get too close because I look too fat. No, I'm kidding. Not really.
So funny, Mike.
But
so we got the same issue going on there.
I'm glad the gym's opened back up, for crying out loud. I got on the scale the other day and it said 1 at a time, please. I was like, what?
You're so funny, Mike.
Anyway, so now that people can access these funds on their 401k, it's more than that. So a lot of people on the job have 401k loans. If you're on your job, you have a 401k. Before the CARES Act, you could borrow half up to $50,000 maximum. So if you had $100,000 in there, you could borrow half up to $50,000 and pay yourself back, your plan back over a 5-year period, prime plus 1 or 2%, whatever your 401k provider said. So what's changed with the CARES Act, and the CARES Act passed March 27th, and it's very important to remember that day because some of this stuff is only good for 180 days unless it's extended. What changed on March 27th is that half up to $50,000 maximum changed to 100%. You can borrow up to $100,000, and you don't have to pay yourself back until 1 year if you're an affected person. after you get your loan. So normally a 5-year loan, it's now a 6-year loan. Your first payment doesn't even start for 1 full year. So
Wow.
that's a big change. And if you already have a loan, you can get another loan. You can't exceed $100,000 though between the two loans. So check with your plan provider on that. So that'll allow you to, get access your money for paying your bills, your rent, your house payment, investing in real estate,
Buying tax liens.
buying tax liens, opening an IRA or not. I'm here to tell you how you can access the money. What you do with it from there is up to you. A lot of people are finally funding a self-directed IRA 401k money because they weren't able to. So that allows you to invest in tax liens, obviously, and not pay taxes on the gains. But we'll just talk about accessing the money for now. So you got your people with the 401k plans. They can have an extra year and they can basically borrow 100% up to 100 grand. Then there's the IRA disbursement. You can take out $100,000 up to $100,000 of any qualified retirement plan if you're an affected person, and you have 3 years from the day after you receive the money to either pay the taxes, and it'll be like it never happened, which right now is known as an indirect 60-day rollover. They basically changed the putting the money back in 60 days to 3 years. So you have 3 years to pay your taxes, which you can spread it over the 3 years or pay it all in the third year, or put it back into another qualified account, and it's like it never happened. So a lot of people are doing both. They're taking the money out and they're going to do tax liens, real estate transactions, pay some bills, and just start paying the taxes over the next 3 years. A lot of people, especially self-employed people, are going to have pretty big losses this year due to, loss of business.
Yeah.
And instead of getting a giant refund check when they do their taxes, they're going to wash out some of those taxes they have to pay for taking that big distribution. So it's a perfect time to, and then some people are putting that money into a Roth IRA and spreading the taxes over 3 years. So there's another opportunity for people. So you've got the 401k plan participant loan. You've got the IRA up to $100,000 distribution with 3 years to pay the taxes back. So between those two things, depending on your strategies, you can really, some people are just going to take the 100 grand out or the 25,000 out or the 10,000 out, make some money, put it back in like it never happened again.
So do they have to take, so if they take money out, have to go back into the retirement fund in order for them not to pay taxes, or how does that work? I lost you. Can you hear me? You're on mute. You just need to unmute. There you go.
It says it's working on my end.
Yeah, you just were muted. You're good now. I can hear you now.
Hear me?
Yes.
Okay. So I can't hear
you. Sound low though.
Hold on 1 second.
All right, y'all. Just hold your horses. Mike will be right back. That was getting good, because I know some of you have some nice retirement accounts. So now you can do something with that money. Let me go and see. It's hard for me to see both screens, but let me see if y'all have any questions y'all want me to ask Mike. Okay, I'm going to repeat the question, Mo. I think it was that
Okay.
Mike, we had to let Mike come back on. So
Sorry about that.
that's okay.
I don't know what's happening, but you were asking about putting the money back in. So their
Yes.
options are they can put it back in that same plan.
Okay, let me ask the question again because they say my screen froze as I was asking it.
Maybe it was you, not
Yeah,
me.
maybe it was me. I don't know. Okay, so what they said, well, the question was, okay, so I take my money out of my retirement account.
Well,
Now I go make an investment, and now I earn a profit on that investment, and then I want to put back the original amount I took out. Do I have to put back the gain as well, like I normally would if I was doing an investment out of my retirement account?
Well, one, you can, depends, well, it really depends. So you have two scenarios. One, you took a distribution from your 401k, or you took a distribution from your IRA. Okay, so if you took a 401k loan, you're just paying the loan back. You can use the money for whatever you want. You just pay it back as fast as you want. If you take a distribution from your IRA, you can only put back in the principal that you took out. Anything above that is sub annual contribution limit.
So the distribution is that taxed?
It's not for 3 years.
Okay.
So put it back in within, if you put back in what you took out within the 3 years, you're in the clear. Can't
so I could make a profit on my money and just put the money back.
That's correct. And you keep the profit. You would keep the profit and pay capital gains taxes or whatever. You'd add that income to your income at the end of the year, unless you took that distribution and you funded it with an IRA, and then you made a bunch of money in your IRA. The gains stay in there.
Got it.
And you already put money into a qualified account, so you satisfied the 3-year rule.
Got it. Okay.
That makes sense.
Mm-hmm.
But if you take the money out of your 401k, you can put it into an IRA.
Okay.
And you've satisfied the 3-year rule.
Okay. Now, what's the scenario if I borrow it and not take the distribution? What happens there again?
If you borrow the money, they'll normally set you on a 6-month loan, 5-year loan. And the payments normally start the month after you receive funds. If you're affected by the virus, the payments don't start for 1 year from the month you received the funds. And you can borrow twice as much now as you could previously if you're affected.
Okay.
It's great because a lot of people are new, they're on the job and they only may have a $10,000, $15,000 or a small 401k, and they were only allowed previously to borrow half. And they're like, wow, what can I do with $5,000? Well, you and I both know you can do a lot with $5,000, but now you can borrow the whole thing and not start paying it back for a whole year.
Okay. And so are they limited to what they can do with the funds when they borrow it or take a distribution?
No, it's not like the PPP program where you have to, as a business person, use the money for payroll and work related expenses. You can use the money for whatever you want. You buy tax liens, buy a house, go to Vegas, you do whatever you want.
So they could buy tax liens, but before they buy tax liens, they could take the Georgia Tax Lien Bootcamp course, right? They could use the money for that. Am I froze or are you froze?
That's another thing. That's another benefit. Or I don't know. You look perfect for me. Am I froze? Because you look good and I can hear you. It says my internet connection is unstable.
Okay, yeah, you'll probably just keep getting that. I'll let you know if we go in and out, but I can hear you right now.
Okay, good. So one of the things that you cannot do is you can use your retirement account to invest in tax liens, but you can't use the money to pay for yourself to go to a school or the Georgia Tax Lien Bootcamp or any sort of education. You cannot do that with an IRA, but you can if you take a distribution and you just use that cash to pay for schooling with the Georgia Tax Lien Bootcamp, and you just buy those tax liens with the cash.
Okay, so they will have to.
It's just an IRA regulation that you can't really benefit yourself. IRA, but it wouldn't be affected to you if they were not using an IRA.
Can you hear me?
I do.
Okay, so they would have to take a distribution or a loan in order to kind of do whatever they want to, and then they have either if they took a loan, they would have 1 year before they have to start making payments, or if they took a distribution, they would have to put it all back with if they didn't want to pay or pay the taxes
within 3 years.
Yes. Okay.
I just tell people to talk to your tax person at the end of this year, and they can probably tell you how to break even and not have to pay taxes. You know,
Okay.
if you're losing money because of the virus and you may have been laid off, that sort of thing, you're likely not going to pay very much in taxes.
Okay. So we had a question. So somebody said, could you explain the 180 days? So is that from March 27th?
March 27th to September 27th. So far, that's the 180 days you have to take that loan on your 401k. They're likely going to extend it, being the pandemic has gotten worse since they passed the CARES Act, which that may be part of the HEALS Act.
Okay.
But right now, you got to get your money within 180 days before September 27th. So keep an eye on that.
Okay, and then it might likely, so we'll know shortly if it's going to be extended or not.
Right. Another suspension in the distribution from a 401k plan, like say you've already left and you have this old 401k, normally if you took a distribution, they would have to take out by law 20% payroll taxes. That has been suspended right now.
What?
Yeah, so you get the whole amount up to $100,000, and they also suspended the 10% early withdrawal penalty for people who are 59 and a half years old. So you're going to basically get all the money up to 100 grand and have 3 years to figure it out when you're taking distributions. And then if you're 70 and a half, now 72 years old, and your required minimum distributions have been waived for 2020, so you don't have to take a distribution this year for any of you seniors watching out there, which is good news.
So what type of accounts does this apply to? IRAs, 401ks, anything else?
All across the board, 457s, 403bs, Roth IRAs, traditional IRAs. The only thing that it's not covered, that it's spelled out in the CARES Act, is it does not cover a defined benefit program, which is a quasi-employer plan.
Is that like a pension?
Kind of a pension.
Yeah, I was trying to see if my mom could maybe get her money, but she has a defined benefit program. She's a county worker, so dang. I was trying to get some of that, get my mom to do some things. So you're on mute.
I don't know if you can hear me. Can you hear me?
Yes, I can hear you now.
All right. I'm going to have to not do any more of these webinars here.
Yeah, I can hear you. I think
internet.
maybe you touched something and it went on mute. So I have a question. So, and I know you can't really give advice, but this is a hypothetical situation, you and I talking. So let's say a person, has a substantial retirement account, and, how do they weigh the benefit of taking advantage of, what's going on now and, not messing up their retirement account, pulling that money out and doing other stuff with it. And then now when it's time to retire, they don't have the money. Like, how can a person mitigate that? Like for me, I know I would invest, but other people, what are you seeing happening with that?
I'm having difficulties with again.
I can hear you. Can you hear
Speakers.
me? Can you hear me?
I hear you.
We hear you.
Okay. Sorry. I missed a lot of what you said. Panicking.
Okay, I'll repeat it. I'll repeat it. So, how does a person weigh, or what are you seeing, or what are you telling people in regards to taking advantage of the CARES Act benefits towards their retirement account versus, someone actually pulling that money out and just basically squandering their retirement account? What would you tell somebody to mitigate that?
Well, I've been running into two types of people, well, really three types of people. One is someone who's not affected, basically. Their job is their job, and it has nothing to do with the public, and they're not closed down. They're making the same they were making. They're unaffected people. Then there's the really affected people who are just going to take that money out and they're going to live on that money, basically. They've lost their job. They were making, anywhere from 50 grand on up a year. So even if they can get $100,000 out, if they're out of work for 6 months to a year, they're basically paying their bills. So there's those people. And then there's the people who are affected, but they're still working. So they still have some income, or one of the spouses working. And those people just need to be careful. So what I tell them, and when they ask me, like, should we use our retirement money right now, because we can, and some people shouldn't, they should just roll with it. I'm not a big fan of the stock market right now. I'm personally leaving that whole thing. But there are people that I say to them, well, what can you do with it? I mean, if you have an investment that you can make money in, and you have a plan, or you have someone like a Chantel Owens that can help you fulfill your plan, be a mentor, you have somebody that is already doing this proven history, track record type of thing, then hey, you're likely going to make more money doing that than you are gambling in the stock market with your 401k or your IRA, because everybody's watching TV right now. We're just one news story away from everything going back down another 30% again. No matter what your political affiliation is, everybody's in the same stock market. So,
Right.
who knows what's going to happen. So that's why my business is thriving right now, where people are done with the stock market and the gold industry is going crazy. Gold and silver, precious metals, people are buying that up right now. But people are, self-directing their retirement accounts to get away from the stock markets.
Mm-hmm.
And we just put my wife's 401k plan at her job into a cash position. It's not making any money, but it's not going to go away overnight either.
Right.
So I'm not giving investing advice to anybody, but obviously things are getting freaky deaky out there, and it's
Yes.
only going to get worse.
Yeah.
I think.
So, I've been talking to students, or people have been asking me questions, and they're like, so what do you think is going to happen with tax liens? And I'm like, listen, you are about to experience something that you may not ever experience again. So you really need to put yourself in a position to take advantage of it. Because when I first started investing in tax liens, it was coming off the market crash of 2007 through 9, not before it, but after it. And so I'm like, literally, you have a chance to, educate yourself, put yourself in a position so that when this happens, and a lot of people are like, you really think it's going to happen? I'm like, listen, the biggest thing holding the economy together right now is unemployment checks. And they're already talking about cutting that. So what do you think is going to happen when the government can no longer afford the unemployment checks? There's a lot of businesses that are not going to open their doors back. So I say all that to say, how can a person that has a nice retirement account use that account to buy tax liens?
Well, if they're affected by the virus, obviously they have an opportunity to, take the money out and use it to create income for their paying their bills and their lives right now. Or they can leave some a portion of it, all of it, in the retirement account and have the retirement account buy the tax liens. There's two competing factors with the government right now. Part of the government is fighting to put a moratorium on foreclosures and foreclosure sales, but yet the local, county, city governments need the tax lien revenue, they need the property tax revenue to keep paying the policemen and the fire department, so they can't do it
like
forever.
Me, Mike.
So I do. Well, I'm just saying it's kind of a fight,
Right.
The government can't do both because, those politicians want to get paid, and the only way they can do it is people paying their property taxes. And there, unfortunately, is going to be a lot of people that are going to probably be renting and walking away from mortgages. And I don't foresee it being anything but a gigantic foreclosure sales like it was back in 2010. And it'll be a great opportunity for people, and you can use that money, in your retirement accounts to access those properties. I know I was one of those people in 2008, 2010, where they were selling $250,000 houses for 75 grand, going, damn, I wish I had $75,000 right now. And I did in a retirement account, but I couldn't use it. So now a lot of people will be able to take advantage of the lower prices.
Yeah, and I suspect there's going to be a lot of commercial that's going to be available because there's a lot of businesses going out of business. So, even in my office building, I mean, like, people are leaving in droves. They're like, we don't need an office anymore. Everything is online. And even companies that are still viable, they're looking at going online. So, I've actually not bought a tax lien in 2 years now, but I'm getting excited. So, all right, Mike. Well, let me see if we have any questions. Let's see. Okay, we have some latecomers. And so they want to know, if you take your 401k money out, will you be penalized? Will you have to pay the 401k back, and will you be penalized? So I think you have to say everything you said before over. Sorry.
Well, on a 401k, if it's your current job's 401k, you can do the plan participant loan up to 100 grand, and you don't have to start paying yourself back for a year. And that's a 5-year loan, starts in the year. If it's an old 401k or 403b or, 427, all of your employer plans that you've left that job and it's still in that employer plan, you can take a distribution and they waive the 10% early withdrawal penalty if you're not 59 and a half, and they waive the automatic 20% payroll tax deduction they take out. And you do have up to 3 years from the day after you receive those funds to put it back in like it never happened, or pay the taxes. And you can spread those taxes out, like I said, 1 year, 2 years, over 3 years, all at once, or a little bit at a time, or, it's up to you.
So how will they be taxed? Will they be taxed at the regular 20%, or will they be taxed at their earned income rate, or what?
It's a 1099 that they add to their income pile at the end of the year, like they had a part-time job, basically, and whatever their tax rate, it is what it is. That's why I say this year, a lot of people's tax rate is going to be kind of jacked up because they're lost a lot of money, especially your self-employed people who can write off more than your W-2 people can. So instead of getting these gigantic refunds at the end of the year, you slide some of that distribution 1099 through there that you took. So you may have a wash.
Yeah. So if I was a W-2 employee only, I could probably start a business now, right? And then I could have my W-2, my new business, which will probably have some losses, and have the best of both worlds, really. If That's if I was W-2, which I haven't had a W-2 in like 25 years, Mike.
Well, a lot of people that are self-employed need to W-2 themselves so they can open up a 401k for themselves.
Right.
Because that allows you to put a lot more money in there than an IRA does.
Right. Okay, well, I think we covered the gamut. I'm excited about these new opportunities that, people have that, just, earlier this year they didn't have. So, and
keep an eye on the dates. The September 27th will be here soon. So they may extend it, they may not. But for all of you people that are looking at doing 401k loans, you only have till then to get the extra year and the extra amount.
Yeah, I'm hoping. I can't see them not extending it. Like, especially if you're wanting to cut unemployment, people have to have a way to live,
Yeah.
So, but yeah, I'll be interested in seeing what's happening. I'll keep my eye open. I'll, call you and, so Mike, before we go, I have to ask, what's going on with your tax lien property? You don't have to tell us if you don't want to, because we're this is public, but
Talking Rock, Georgia property. It's good. God has been good to me. I have a good tenant, and he's a fixer-upper guy, and he pays $500 a month and doesn't ever call about anything to get fixed, and it's up there in Pickens County, which is a good jog
and
away.
If you don't mind, how much did you pay for that? I'm just
$1,250.
$1,250. See, people don't believe me, Mike.
I know.
You paid $1,250.
Plus, I'll be honest, it was probably another $800 in legal fees for my foreclosure and my quiet title action. Ooh. So I probably have about $2,200 in it.
Oh, big deal, right? Like, that's what I'm trying to tell people. It's still possible, yo. And I really, I've met Mike. Mike said, could you show me how? I don't really want to attend your class. And because me and Mike have a relationship, I just walked him through the process. He pretty much did everything. So
I just brought the pizza. I just brought the pizza and stood in the back room and took notes for free. I feel like I cheated you.
No, Mike, you have been really good to us, really, really good to us. So don't ever say that.
You teach a lot, and a lot of your stuff that you do, the free stuff is like a lot too.
Yeah. See, tell the people, we have people on here. They're like, oh, I don't know if I'm going to sign up for your free webinar on tax liens. I'm like, what? It's free. What? It's just you're spending your time. Now, what's so crazy is, Mike, I have so many people have told me, listen, you have to stop this free webinar. You need to start charging at least $20 for this webinar. Some people say more. And so, when I hear people like that, I'm like, you know what? People really don't appreciate free. So maybe we need to charge. So all you guys listening, you need to go ahead and get signed up before, they make me change this from free to, paid. So, well, I appreciate your time, Mike. I'm not going to hold you up. I just wanted to, for us to collaborate and get this information out. Can you give everybody your information?
Well, there's two ways to reach me. And my mobile number is probably the best, which is 770-780-0548. And then Mike Ventry at AmericanIRA.com.
I'm going to type that over here in our Facebook comments so people can get that. If I can figure out how to do that. What happened to all the comments? I don't know. I don't know what I'm doing sometimes.
I actually might be able to do it on here. In the chat?
Yes, you can. They will be able to see it.
I don't know if they'll see it
on
Facebook see it or not.
Right. It won't, but that's what I was trying to do. You can I see it. I see it. Yes, Abby, we're having one on August 5th. And you can thanks. Charlie put it in there. Hey team. Hey Charlie. Hey Kim. Hey Mo.
There you go.
Put it on this live. Mike Ventry, American.
And I'll keep an eye out for that HEALS Act and see what it does to change the information I just passed out. You can tell people too, they can email me and I'll put them in the system and they'll get invited to our regular lunch and learns and, the live events we do in our Duluth office.
Okay. Well, tell me your number again, 770.
780 0548.
0548. Okay. And then you said they can email you. It's Mike, what, at American?
Mike Ventry, that's V as in Victor, ENTRY, at AmericanIRA.com.
All right. All right. So we got your information in there. So y'all make sure y'all, hit Mike up if you have, I think you're on mute again, Mike.
Uh-oh.
Oh, no, you're not. I'm looking at a delayed. I'm sorry, Mike. I'm messing both of us up. But anyway, hit Mike up if you have questions about IRA, if you want to transfer your IRA. So talk before we go, just let them know, about you being a custodian and what they can do with you outside of, this whole CARES Act.
Well, they don't have to call me just to do retirement accounts. They can call me just about CARES Act stuff, especially those that came late and just want to get caught up. That's great. But we're not just an IRA administrator. We're also a custodian. So it's more of a one-stop shop for a lot of you who haven't looked into self-directed IRAs. There's a lot of companies out there, and a lot of them are just brokers, and the fees can get jacked up. Where we have one low fee. We actually have $165 a year special for beginners with accounts $7,500 and under, which nobody has in the whole country. So the fees are a lot cheaper, being we don't have a middle man to pay out there for being the custodian. And, we're very personal size company. So you'll get that hand-holding feel that you want, especially if you're new to, retirement accounts. We're a perfect place for you.
All right. Well, awesome. So guys, I've been working with Mike for 3+ years, and everybody that we've ever sent his way has had nothing but great things to say. So they're satisfied, and we love him at Georgia Tax Lien Bootcamp. So go ahead and support him. So
Thank you,
Mike. All right, Mike. Enjoy yourself on that water out there.
Okay, thank you.
All right. Thanks.
Bye-bye.
Bye-bye. All right, y'all. Hope y'all enjoyed that. Hope you gained some valuable information. Go ahead and, use your retirement account to build financial freedom for you and yourself, and to create generational wealth. And, if you want to invest in tax liens, make sure you sign up for our introductory webinar. The link is in the comments. It's introwebinar.gataxlienbootcamp.com. It's a great evening filled with fun. You're going to learn a lot and have fun. And you'll really get to decide if tax lien investing is for you, as well as we've just given you information on how to fund your tax lien purchases, as well as we have advanced boot camps. The free boot camp gives you, as you heard Mike say, it gives you almost too much information. But in our advanced boot camps, we actually hold your hand and show you how to invest in tax liens. So if you're interested in our advanced boot camps, you have to come to the introductory boot camp, because that's where we talk to you about what happens in those boot camps and how much those boot camps cost. So feel free to join us, and we hope to see you soon. And you all have a wonderful evening. Good night.